One of the hottest new dApp tokens on Solana is about to launch on April 30th. And in this video, I'm going to tell you guys everything you need to know about the Kamino Finance launch, as well as their Kamino token. Now, before getting into this video, I want to remind everyone to do your own research. This isn't financial advice, and let's get into it. Now, I haven't made too many Solana videos in the past, but I've been paying more and more attention to this ecosystem because Solana is really proving itself to be a blockchain here to stay. And you can't deny all the different volume and transaction metrics that are really happening on this chain. And Kamino Finance is the premier lending and borrowing protocol when it comes to the Solana ecosystem, with over $1 billion worth of TVL. And they have all of these different types of borrowing and lending, very similar to Aave, as well as being able to leverage with different longs and shorts within the Solana ecosystem. Now, a lot of people know about Kamino because they have been doing a whole entire Genesis farming campaign for their Kamino token. And on April 30th, we're finally going to be able to claim these different points in order to get that Kamino. And that Kamino is representing 7.5% of the overall supply and about 75% of this initial starting circulation. If you want to learn more about this airdrop, because they are having multiple seasons in the future with additional airdrops, I'll have their documentation in the description. But the big thing that they're trying to do is reward people that actually use their platform. So if you were borrowing or lending or supplying liquidity, you were able to rack up these different points. And on this April 30th, when they actually release their token, you're going to be able to claim your points and get this Kamino token as a result. And like I said, there's going to be different seasons. Each season is going to have a different duration, different mechanics, different airdrop schedules, and different allocations. And there's going to be at least a few seasons here, with one of the benefits of this Kamino token being able to be staked and giving you a bonus multiplier on farming their next season. Now, their site is pretty straightforward, and the closest comparison is actually Aave over on Ethereum, where you can do a bunch of borrowing and lending between all of these different tokens out there. And a lot of people have been borrowing and lending and doing this whole entire loop in order to get additional points. They also have these different liquidity vaults where you can add liquidity and earn an APR based on the trading fees. And then they also have longs and shorts on here as well as different portfolio stuff. And then very soon here, they're going to have not only the staking for the Kamino token, but they're also going to add the governance, which is one of the main utilities of the actual token. Now, if you look at the Solana ecosystem, it has one of the highest TVLs out of any blockchain out there. And it shows that this Kamino token has over $1 billion of TVL, which is actually the third largest. And both Marinade and Jito are mostly just staking Solana, which is really easy to rack up TVL. So this is actually a pretty impressive number with Kamino in general. And this is after a pretty large reduction in the past month, as the market has been getting hit pretty hard and people have been moving out of these different DeFi projects. Now let's get into the launch details of the token as well as the tokenomics. The ticker is going to be KMNO. There's actually 10 billion of these tokens in existence, with 1 billion being the starting circulating supply. 750 million of that is going towards this airdrop farming campaign. And then I'm guessing the rest of it is going to be for liquidity when they actually launch their token. And this TGE is going to happen on April 30th. The distribution is broken up into a few main areas. The first thing is their community and grants, which 35% of the tokens are allocated to. And this is grants for the teams that help build on this Kamino product stack and build different utilities within the ecosystem. And I'm sure a percentage of this is also for these different airdrop campaigns, because they said 7.5% of this, which was for airdrop 1, is coming out of this allocation. So expect this allocation to be for more airdrops in the future and different community incentives, such as providing liquidity with their pairs. And like I just said, 7.5% is going towards this Genesis community allocation from all the farming. 10% is going to liquidity and treasury. And then a combined 55% is going towards different core contributors, stakeholders, and advisors. For me, I just pull this as a team, and this is a pretty high percentage in my opinion. Over half of all the tokens are going to team members essentially. But the big thing you have to know is that all these tokens are locked for a year, and then they have a 24-month vest, whereas the liquidity and the community grants, as well as the liquidity and treasury, are not locked, and I don't know where the exact emission schedule is. As far as the utility itself, you're going to be able to take these Kamino tokens and stake them and earn points, which are going to boost your overall earnings when they do the next season of airdrop. And then they're also going to have a governance protocol where these tokens can be used to vote for different decisions. And they even show in here protocol revenue allocations as one of the decisions you can can make. So most likely, once this governance goes live, there's going to be a vote on a revenue share from this protocol. So most likely, this Kamino token is going to be able to get a percentage of the actual revenue generated on this platform, which means the better this platform does. And if you believe Solana is going to get bigger in the future, and you believe that Kamino is going to be one of the main lending and borrowing platforms, it means that you can actually share in the revenue of that success. And that's actually something I really look for in these different project utility tokens. Now, I don't think they could come out and right away just say, hey, we're going to do protocol revenue. But instead, if the whole entire governance votes for this to come in, now all of a sudden they get a thumbs up on the legal side, or at least that's how things are going right now. Now, the next thing that I wanted to go over here is looking at some of the pre-market of the Kamino token. And I found this is actually the best way to kind of evaluate where you think a token is going to go when it gets listed on these different centralized exchanges. Now, we don't know what the price of the token is going to be when they actually launch, but a lot of times they'll launch on these different centralized exchanges. They'll launch at a pretty low number. Oftentimes we can't get in as retail investors, and these different institutional bots pick it up. But what's really nice is you can go to sites such as Whales Market, or you can go to Drift, and you can get an idea of what people are already trading this token at. And currently it's going for about $0.132 per token on both Whales Market as well as Drift, which is very slightly higher. Now, what's interesting about this is it means that the starting circulating market cap is going to be around $132 million with an FDV of around 1.4 billion. Now, there's been a lot of tokens releasing recently on Solana, and a lot of times they go on these massive runs and then massive dumps, or they'll start off high and a bunch of airdrops will claim it, and then it'll just dump, and then it'll go on a run. And we saw this pretty recently with Jito. We saw it pretty recently with Jupiter. We saw this with Wormhole, and it's been a common theme recently where a bunch of people get this airdrop. A lot of times they have just been dropping it down, and then it'll steadily go on the incline. Now, do I personally think this $132 million circulating and $1.4 billion FDV is fair value? Well, guys, we have to kind of look at some of the other top Solana projects in the ecosystem that are the most comparable with Kamino. And one of the things that's a little bit hard to tell with Kamino is I know a lot of people have simply been borrowing and lending and looping a lot of the same liquidity, and that could have been an artificial increase in the overall TVL. Yet from my understanding, Kamino is definitely the most used protocol over on Solana when it comes to this borrowing and lending. Now, we can look at some of these top Solana ecosystem tokens that are the most similar. Jupiter, we have at a $1.4 billion market cap, and I believe a $10.4 billion FDV. And yes, Jupiter is a decentralized exchange aggregator, but they have very similar amounts of TVL as well as traction. Another good comparison or similar comparison is both Radium and Jito. Yes, I know Radium is once again a DEX, and Jito is more so liquid staking, but we're looking at a $424 million circulating market cap for Radium, as well as a $389 million circulating market cap for Jito. And once again, Kamino is looking at around $132 million right now. And if you look at the FDV of Radium, we're sitting at around $900 million, which is less than the $1.4 billion that we're opening up at for Kamino. But then for Jito, the actual FDV is about $3.2 billion, which is almost a third of the starting FDV of the current Kamino token price. Now, outside of comparing this with other Solana projects, we can look at Aave, which is the closest comparison to other blockchains. It is by far the largest borrowing and lending protocol in all of crypto, and they're currently looking at a $1.37 billion circulating market cap, and their FDV is almost the same at about $1.5 billion. So the FDV for Kamino is opening up at a very similar valuation as Aave, when Aave has way more trust and way more users and just way more longevity in the market. Now, I do want to say that Kamino Finance has been building all the way since 2022, and they actually have 15 people on their team. All of their smart contracts are audited. They've been building quick, and from what I've been able to see, executing at a pretty high level across the board. So to compare this to Aave right now is a little bit hard for me, simply because of how long Aave has really been around and how dominant they've been in the market. But I think that if Solana has a ton of upside as a project, and if Kamino can continue to hold their position, then that FDV doesn't seem too crazy to me in the long run, especially since Ethereum is just getting so expensive to actually transact on, and the actual adoption of Solana is only increasing. We actually saw just recently that Stripe has integrated or is about to integrate USDC that's based on Solana, and I think there might be more protocols and more Web2 companies going to integrate Solana in the future, just because of the amount of transactions that can be handled on the chain. So with all that being said, what are my personal thoughts and opinions? Well, guys, the market is a little shaky right now, especially with a lot of these smaller cap projects, and a lot of these new tokens that have been coming out have been going on pretty big dumps as a lot of people just dump that airdrop. So in my personal opinion right now, I think this $132 million circulating market cap with $1.4 billion FDV is actually a pretty fair valuation, or might actually be undervalued in my opinion. And the reason I think this is that because it's 10 times smaller than the current circulating market cap of Aave, and then it's also about 3 times smaller than both Jito and Radium, and once again about 10 times smaller than the actual Jupiter token. Now I know this FDV is high, but the vast majority of the tokens are locked all the way for a year, where 55% of the tokens are in that cliff. So the only inflation that we have, at least in the beginning, that can negatively impact the circulating market cap is the different emissions that are going to be coming from this future airdrop of season 2. But we know that the seasons run for about 3 months. So for about 3 months, people are going to be able to stake and farm this next airdrop, but we're not going to get any additional emissions from that. And we know at the same time that there's going to be all these different pairs that open up with the Kamino token in terms of liquidity. And by having all these different liquidity pairs, it increases the actual value of holding the Kamino token because of all the buy pressure within these different liquidity pairs. And by actually providing the liquidity yourself, you're going to be able to make all these different market making fees and rack up even more points. So it's one of those situations where I think the circulating market cap is pretty undervalued. And I think that because you can stake it right away, and because there's going to be so many ways to use this token and earn revenue, I think it could almost be like a self-fulfilling Ponzi where a bunch of people are buying this in order to get more of the token that's going to be coming out in the future and earning all these different yields in the meantime. Now, it is a little bit riskier buying in the pre-market right now, simply because of how the performance has been on a lot of these different tokens. So in my personal opinion, I'm waiting for this token to potentially get listed on some different centralized exchanges, waiting for a bunch of people to dump their airdrop, because that's the vast majority of the supply that's going to be circulating right away. And then I might buy up some of these tokens for a 2 to 3 month swing trade. If I can potentially get in at a good price, I'll buy some of those tokens, stake that, earn a yield on that, do some different borrowing and lending, whatever I need to do to earn that second season airdrop. And then I'll probably sell those Kamino tokens before that airdrop goes out. And then once that airdrop does go out and a bunch of people most likely dump, I'll probably sell those tokens at that time as well. And then maybe a week or two later, I might buy again and do the same thing for season 3. I do know that there isn't going to be too many emissions for the first year, but leading on to the first year, I wouldn't really want to be holding this token, simply because 55% of all of the tokens are going to start being slowly vested out. And I think that's just going to be a decent amount of sell pressure, but my opinion can change over time depending on what happens over the course of the year. The one thing that I want to say here is that if you have to lock up these tokens until this next season is over in order to get those point multipliers for Kamino, then I probably won't do this. My strategy is based on the premise that I'll be able to stake this, earn these additional points, earn these additional multipliers, unstake at any time, and sell at any time. But if I actually have to lock this for the full duration, then that's going to change my overall strategy getting into this. That pretty much wraps up this video. I hope you guys enjoyed one of my first Solana breakdown videos. I'll probably start doing a lot more of these Solana videos, as well as Bitcoin and other things that are hot in the ecosystem. So if you're interested in this sort of content, definitely subscribe. And if you're looking for some sort of alpha group that goes over a lot of different hot information in the space, please join our Discord in the description, open up a support ticket and ask for a trial pass, and you'll get a free week just to see what our group is about and what we're trying to do. But yeah, guys, that wraps up the video. Hope y'all enjoyed it, and I'll catch y'all later.